Khoon Goh, Head of Asia Research, ANZ Research, joining us this morning. Thank you so much for speaking with us, Khoon. And, just a start on how much of a concern is Iran, Israel, and the possible involvement of the United States going to be?
This is a major concern for markets right at this point in time, and we've seen that with the way oil futures have been trading. They are largely holding on to the gains since last week. But the comment from President Trump that he's going to make a decision within 2 weeks has provided a slight relief for Asian markets today. That's because there were concerns that the US might act as soon as this weekend. Which prompted some risk-averse moves yesterday. But the latest developments suggest that maybe a 2-week time frame will provide sufficient space for negotiations and perhaps some de-escalation. So that's provided a bit of relief for Asian markets to start our morning.
Khoon, but looking a little further down the line, there seems to be a lot of volatility in the commodity space as well, specifically crude oil, because if you remove the implications of this conflict, the supply situation and the demand situation would require crude oil prices to drop from where they are. So how do you see that picture moving, and what is the impact that you see on capital markets if there is a sharp deceleration in crude oil, assuming that this conflict eases off?
If there's a de-escalation, then I'm very certain oil prices will come off. And we've seen this time and time again, every time there's a geopolitical flashpoint in the Middle East. These things don't tend to last very long. And let's hope this time around is one of those instances. So while there's a geopolitical risk premium in oil markets right at this point, if there is a de-escalation and things start to settle down, then I have no doubt oil prices will retrace back, likely to where they were prior to Israel's attacks on Iran. And on top of that, let's also bear in mind, in terms of the broad fundamentals, there is no doubt that the global economy is slowing in part because of US tariff policies. And OPEC Plus has actually been increasing their oil production. So net-net, those suggest that oil prices will travel lower once the geopolitical risk premium is removed.
Okay, just trying to understand from the Asian markets perspective, Khoon, and we've seen China hold on to interest rates, a spike in core inflation in Japan. Possibly you're going to see interest rates going up there. What is that whole scenario looking like for you in terms of emerging markets as well and interest of flows there?
Well, in Asia, it's actually quite mixed. If you look at the export sector, there's no doubt this region is benefiting from a lot of front-loading activity during the 90 days tariff pause. So we've seen very strong export numbers from countries like Vietnam, from Malaysia, and Taiwan's exports have been exceedingly strong. But South Korea exports have really struggled, and China, because of the exorbitantly high tariffs, their exports to the US has come off very sharply. So it's a very mixed bag there. On the inflation front, I think Japan is probably the only country that's going to be facing upside inflation risks, whereas for the rest of the region, the risk is more towards disinflation. And therefore, I think the Bank of Japan might have to restart their tightening policy at some stage later this year. The yen is, in my view, too weak, and part of the reason why Japan is facing high inflation. I think the yen really needs to be stronger, and if the Bank of Japan were to restart their rate hiking cycle, I think that could be the catalyst to push the yen stronger.
But what are the implications of that on flows? Because already you're hearing of Japanese large investors pulling money out of the United States and certain other markets, repatriation of the funds, so to speak. Will that be a process that, in your opinion, will play out over a couple of quarters, a few months? And what happens to the markets from which they're pulling capital from?
In terms of the flow picture, it's definitely improved in Asia. After a period of strong outflows since the start of the year and throughout the period when tariff policies was changing quite frequently, we started to see a more steady inflows both into the equity and the bond market in this region over the past month or so. And I think those flow picture could well continue in the near term. You mentioned, yes, there has been definitely a reallocation of private sector capital out of the US, and those capital need to find a home somewhere. And Asia at this point in time still has a fairly robust growth. I think they stand to potentially benefit from supply chain shifts that are going to happen as a result of changes to tariff rates. So we are seeing strong flows into Korea, for example, now that their domestic political uncertainty has been settled. We're still seeing fairly decent growth into other parts of ASEAN as well. So I think this is not going to be short term. I think the capital reallocation will probably occur over several quarters.
Khoon, thanks so much for joining us as always. Pleasure speaking with you this morning, and thanks for that perspective.